Hey, what's going on everyone? It's Griffin here, and you saw it in the video thumbnail. Today we're going to be going over a couple great dividend stocks that you can add to your portfolio, moving now into November and soon to be 2020, which, let's be honest, I think holds some elements of unknown and uncertainty with the overall markets right now. We're pretty much at the peak of one of the longest bull markets in market history, at over 9 years now of constant growth. And if we take a look at the S&P 500 chart here, it's pretty evident that investors having invested in the past decade in pretty much any single stock will have made a killing. But today we're talking optimism, because if you focus on consistently investing your funds in solid stocks and ETFs that are properly diversified, as well as having a proven track record of consistently paying out dividends and raising them over time, then yes, a short-term market correction would have a short-term effect on your portfolio returns. We're not concerned here with short-term unmaterialized losses, because it's only a loss if you sell your assets. What we're interested here on this channel is not short-term gratification or short-term gains, but rather a long-term approach investing in solid stocks, ETFs, and REITs that have the potential for value growth, so in terms of the actual asset value, the share price, but that also reward investors by paying them out a healthy dividend for holding the stock. Simply put, if you invest in companies that have a long-term track record of consistently paying out dividends and raising them over time, and combined with that, you have a long-term investing horizon mindset ahead of you, then staying invested in the markets and receiving those dividend paychecks is definitely a plan for success with your portfolio. So if you're looking to learn about investing in the stock market and creating your own solid dividend stock and ETF portfolio, then you're in the right place, because this channel is dedicated to helping you better understand how stock market investing works and how you can tailor a portfolio to your specific situation as an investor. I highly encourage you to take a peek at some of my other pieces of content that can complement what we'll be covering in today's video, and to also check out these pieces of content in written blog format over at my website, griffinmilks.com. And if at any time during the video you're finding value and you're enjoying the content, then make sure to hit the like button. It really helps the channel grow and helps with the YouTube algorithm. So with all that said, let's dive right into the content of today's video, which is 3 dividend stock picks for the month of November that I think would be worthwhile holding in your stock portfolio. So the first stock on today's list is Algonquin Power and Utilities Corporation, ticker symbol AQN on the Toronto Stock Exchange. As the name of the company would suggest, this is a utilities corporation, and if you know anything about utilities in Canada specifically, at least, typically these types of companies will pay out a hefty dividend and have been doing so for a consistent track record of years. Just a bit of info about the company here. AQN generates and distributes its energy primarily in North America, and it owns and operates regulated water, natural gas, and electricity distribution utilities in the United States. Now, the company does actually generate most of its revenues from the natural gas portion of the company, but nonetheless, it's heavily invested in solar renewable energy, which I think will be a growing contributing factor towards their growth and revenue in the coming decade. When speaking about its operations in the renewable energy sector, Algonquin Power does have interest in solar, thermal, wind, as well as hydroelectric renewable energy sources spread across a variety of different states in the United States. So although you may have never heard about Algonquin Utilities in the utility sector, this is most likely because the utility sector is generally overshadowed by large companies such as TransCanada, Enbridge, and others, but nonetheless, this is still a company to keep on your radar that is really growing its assets in the renewable energy sector, and is definitely one that you should consider on your dividend list, which we're actually going to be looking at next. So if we take a look at the 5-year growth chart for AQN on the TSX, at first glance, this 5-year chart may look somewhat disconcerting. However, the share price has climbed significantly over the past years, even growing by roughly 34% year to date this year, which is significant, especially for a utilities company. However, the positive direction and increased demand for renewable energy, especially in the next decade, combined with the financials of this company, I still think there's room for significant growth, in addition to the nice dividends you're going to receive along the way. The basic quote indicators are pretty solid, with a price to earnings ratio of roughly 19.5% at the time of filming today's video, an EPS of 0.92, and a PB ratio of 2.174. The numbers might be different because I'm going to be recording the actual numbers on a separate date, but at the time of recording this video, these are the numbers. When looking at the financials here, we can see that the company's revenues are growing year after year, with net income also following a steady and healthy growth rate. If we quickly look over at the balance sheet, AQN has now over $10 billion in total assets, with liabilities sitting around $6 billion. And finally, if you're investing in a company to receive dividends, well, AQN is definitely a stock to own because they pay out a quarterly dividend sitting at a 4% yield and have been raising dividends over the past 8 years, which is definitely something we want to look for when investing in solid dividend stocks. All in all, Algonquin Power and Utilities Corp is a great dividend stock to hold in your portfolio, and I think it has tremendous potential for actual asset value over the next decade, especially due to the fact that renewable energy is going to become a lot more predominant in our society. The second dividend stock on today's list is Power Corporation of Canada, ticker symbol POW on the Toronto Stock Exchange. POW is in fact a highly diversified parent holding company with significant interest in the financial sector, communications, and other business sectors through its controlling interest in Power Financial. Power Financial in turn holds a majority interest in Great-West Lifeco, which is one of Canada's big 3 insurance providers, right behind Sun Life and Manulife. And Great-West Lifeco does have massive corporate insurance policies with both the private and public sectors, like the Public Service Healthcare Plan for the Government of Canada employees. Power Financial also has majority interest in Investors Group, which is one of the largest and most well-known asset management companies in Canada. If we actually take a look here at the organizational chart of Power Corp, we can see this relationship between the entities and different subsidiaries, which brings me to my next point that is related to IGM Financial. The reason why this is of interest to me is because of the combined voting interest of about 82.3% in the Fin startup company Wealthsimple. If you've been following my content for a while now, then you're definitely aware of my love for this online-based robo-trading platform marketed primarily towards millennials, and it's been tremendously expanding over the past couple of years. What's more is that Wealthsimple has just purchased the online tax company SimpleTax, integrating the process even more seamlessly into your Wealthsimple experience. In sum, Power Corp is a parent holding company that has highly vested interest in a variety of different industries and sectors, as well as in a variety of different geographical areas. And for these reasons, although it's really a company that doesn't get much press time and you've probably actually never even heard of it, this is still a really great dividend stock to hold in your portfolio for healthy long-term dividend gains. If we take a look at the 5-year chart for this company, at first glance, the company has had somewhat volatile price fluctuations over the past half decade. However, I do still like this stock as a dividend holding stock due to its 5.315 dividend yield and payout ratio of roughly 45% at the time of filming today's video. If you're hearing about a dividend payout ratio for the first time in today's video, well, essentially what it is a percentage of the net income left over from a company that they decide to redistribute to its shareholders. In this particular case, about 45% of the leftover net income from the company is redistributed to shareholders, and therefore 65% of net income is still available to the company to make acquisitions or expand their operations in new markets or new sectors, for example. And this is most likely going to provide the company to have the opportunity to make more revenue for the company and therefore grow the company even more and pay even more and more dividends out to its shareholders in the future. Another thing that this 45% payout ratio indicates is that even though the dividend is quite high for this stock at the current time, the low dividend payout ratio indicates that the current dividend is sustainable over a long period of time in the future and can also have room for growth and not impede on the net growth of the company. So in sum here, if you do want to invest in a company that is boring but is well diversified and has a proven track record of consistently paying out dividends, then Power Corp is definitely a contender for your portfolio. And finally, the last stock on today's dividend list is a company that's in a completely different industry than any that I've covered on this channel, and it is the company Magna International, ticker symbol MG on the Toronto Stock Exchange. Magna International happens to be one of the leading manufacturers of auto parts in the world and is the largest one in North America based on revenue. Magna International does operate on a worldwide level, however, with over 320 manufacturing facilities across 30 different companies, dividends, it's safe to say that this company is highly diversified, giving it more slack to weather downturns and cycles in the auto industry. And just a fun fact here, Magna International is actually one of the largest tenants of the real estate investment trust Granite REIT that we covered in my last Dividend REIT video. Now, when looking at a 5-year chart for Magna International, it's been trending relatively sideways with only about 5% gain in the past 5 years, which isn't terrible, but I still believe this is a solid company to invest in due to its financials and lowly leveraged operations. The company currently has $14.7 billion in liabilities, but has assets far exceeding that at $26 billion. At the time of filming this video, the EPS is pretty high here at 10.74. The price to earnings ratio is also quite low though at 6.30. And what's more here is that Magna International is a Canadian dividend aristocrat, having raised its dividends for 9 consecutive years at above average dividend growth rates. Just in the past 5 years here, we've seen dividend growth rates climb by 15% annually at a dividend payout ratio of only 16%, which is really low if we remembered what we just covered. And if we remember what we covered earlier in the video here, having a really low dividend payout ratio indicates potential for huge growth and expansion in the company, as well as continuously raising dividends over time. This 9-year dividend growth now leaves investors at a 2.95% dividend yield, which is honestly a really nice yield to add to your portfolio, especially based on the fact that this is a solid and established company that has operations in a variety of different companies and a ton of assets. So that's it for today's video, guys. I really hope you enjoyed the content, and I want to know down in the comments what you think about these 3 stocks. If you enjoyed the content, make sure to give the channel a thumbs up. It really helps the channel grow and helps with the YouTube algorithm. And I also want to remind you guys that if you're interested in reading this content in written blog format, then click the link down in the description. It'll bring you directly to this article on my website, griffinmilks.com. And feel free to check out my other videos on the YouTube channel. We cover a bunch of different topics that are related to investing, savings accounts, credit cards, and a bunch of other awesome topics. So on that note, thanks a lot for watching, and I'll see you in the next video.